Welcome back. I'm Pratap here. Today is 25th June 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. So yesterday we identified 4 high liquidity zones from 75 minutes supply zone. So let us evaluate their performance. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So from our channel, click on this community tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. Click on this link. Now I am clicking on the link and we are into the supply demand zone price action course playlist. So in this playlist you have all the training videos are available. We just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you each time when we release a new YouTube video or any other important updates we will provide at our Telegram channel. Now let's get into the analysis discussion. So we have identified 4 high liquidity 75 minute zones from our previous report. Out of these 4, some of the trades are executed. Let us discuss one by one. So RAMCOCEM, so we have a drop, base, drop. This is a 75 minutes high liquidity zone. This 75 minutes high liquidity zone, we fine-tuned with the 15 minutes time frame. If you look into the 15 minutes time frame, here we have a drop, base, drop, and this is already violated. And we don't have any proper price structure here. But today, in the live market, see here, we have a drop, base, drop is created. This is the ERC candle. We have a base candle and then again we have a drop candle. This is the 15 minute zone is created. This is what I have drawn here. So within this 15 minute zone, again we fine-tuned with 5 minutes time frame. Again we have an excellent rally, base, drop is created. The 5 minute structure. And look into this blue color line. This is the entry buffer. Before getting into this zone, you can add a maximum of 0.1% entry buffer. So this is the blue color line if you draw that from this entry. See, prices entered inside this zone and picked up the orders and again they came down. That means the trade is executed with some entry buffer. So the entry buffer value is somewhere around 85 paisa. If you add the 85 paisa entry buffer, you can see this blue color line. So prices went a little above the blue color line. That means our trade would have been executed. And then a 15 minutes target. Here you have a rally, base, rally. The 15 minute zone is there. So finally prices reached this 15 minute zone in this candle. And when you got the entry in 10:45 minutes, 15 minutes candle, and when it reached at 13:30, 15 minutes candle, it reached the target. And this is the way RAMCOCEM has given a profit, 10,200 rupees profit, which is 7.6% return on the investment as per one futures margin cost. I repeat, 10,000 rupees, 10,200 rupees profit, which is 7.6% ROI, and this is as per one futures margin cost. This is what dynamic fine-tuned 15 minute zone in live market within 75 minutes high liquidity zone. This topic you already learned in lesson 21. In lesson 21 we have around 8 or 9 parts of videos are there. So one of those videos you have learned this concept. And also we got one more trade, VOLTAS. So VOLTAS is also a 75 minutes high liquidity supply zone. This is the one we have a drop, 3 base candles and a drop. This is the zone. And this 75 minute zone is fine tuned with 15 minute zone. We have a ERC candle rally. We have a base candle and then drop candle, follow through candles. So this is the 15 minutes fine tuned zone. Inside 15 minutes fine tuned zone, again we have 5 minute zone. We have ERC candle here. This is the lagging. We have 1, 2, 3, 4 base candles and then drop candle, drop base drop. This is the fine tuned 5 minutes area. But this fine tuned 5 minutes area is already tested. So almost tested, almost. That means we can accept a trade here. But what happened? After that a dynamic entry buffer is created. You already learned dynamic entry buffer zone. Before the high liquidity zone. We have high liquidity zone. Before high liquidity zone we have a drop based drop is created. This is acting as a dynamic entry buffer zone. And you know about dynamic entry buffer zone. Until this zone is violated, it will not let the prices to reach this high liquidity zone. And these dynamic entry buffer zones will give you several trade opportunities. See here, drop base dropped. After that, this was the first test. Prices came down. This is the second test. Again, prices came down. This is the third test. Prices came down but not significant. And today, not today, previously, prices again, I think the same trading day, Monday. Monday it gave first test, not significant. Again it gave second test, and after that see how significantly prices has come down. It has given a very good profit yesterday, this dynamic entry buffer. And see today what happened again. Market started, this is the today's morning candle, 9:15 candle. After that prices came up. See how sharply prices moved. But the moment they entered into this dynamic entry buffer zone, again the sharply prices started moving down until its next 15 minutes demand zone. Let me change the time frame to 15 minute zone. See here you have a rally, base rally. And today prices reached this zone. And when we got the entry today, at 9:30, 15 minutes candle we got the entry. And when it reached the target, at 12 o'clock, 15 minutes candle, it reached the target. And this is the way VOLTAS has given a profit 13,170 rupees profit, which is 7.4% ROI. Here profit is less, ROI is more because the margin cost is less for RAMCOCEM compared to VOLTAS. But anyway, VOLTAS has given 7.4% ROI as per one futures margin cost. Both the trades gave very good, excellent, because our average ROI is, average intraday ROI is 6% for high liquidity zones. So they gave more than 1.5% average from both these trades they have given. And this is the dynamic entry buffer zone before 75 minutes high liquidity supply zone. This concept also you learned in lesson 21. In one of the videos, we have around 7 or 8 videos are there in lesson 21. So one of the videos you learned this concept. That's why understanding the concept and observing the concepts are very, very important. Otherwise, we miss good trade opportunities. And the third one is Tech Mahindra. This is also given a trade, a 75-minute zone, but the trade is violated. It stopped out. I mean to say, stopped out. See, this is the ERC candle. Drop base drop. Prices moved up and then came down. So it is looking like a failed ERC candle, right? But anyway, drop based drop. And this 75 minutes high liquidity is on, fine tuned with 15 minutes time frame. See here you have a drop, base, drop. This is the only valid one. This is the 15 minute zone. And within this fine tuned 15 minute zone, we have a fine tuned 5 minute zone. See, we have a drop, base, drop and follow through candle. And see the rejections are, that means prices are before entering into this fine tuned area, they were moving down. That means there is a very strong order flow is there. Definitely there is no doubt, this is a good zone. But today see what happened, the zone is violated. Why it is violated? Maybe the demand is very strong. The reason is, see, prices went into the zone and again came down, but not good enough. They couldn't reach up to the 15 minute zone area and violated. Mainly because the reason why zone is violated, today's demand is very strong. See institutions how they created. Rally, base, rally. They want to violate. Because the order flow is very strong, it couldn't violate and again prices came down. Once again institutions drop base rally, they finally violated because earlier it reached near to the distal line. So second time the zone is violated. But actually, very interesting thing is, if anybody would have added an entry buffer, you would have get a trade here. This is the first candle. When it is at 9:45 minutes, 5 minutes candle, your entry buffer would have been executed here. If you use 0.1% entry, this trade would have been executed. See after that how prices came down. But only problem is they couldn't reach up to the 15 minutes target zone. See the 15 minutes target zone. Let me show you. This could have been the entry in this candle. But your 15 minutes candle could have been this drop base rally. Not a great leg out, but okay, this is a target zone. This could have been your target demand zone. Prices came down, they didn't reach up to here. Still, if you would have done a proper analysis, you would have got some small profit, not good profit, but small profit we would have got in this stock. If you go to the 1 minute time frame, you will understand. 1 minute time frame, there is a strong order flow is there. Within this area. There is a strong order flow is there. And this strong order flow is not letting the prices enter into this 15 minute zone. See prices, already this zone holded the prices here. Next time prices came close to this 1 minute zone, again moved up the order flow. Next time also prices came very close to this, a little above compared to the previous one, again pushed the prices. So institutions kept a lot of huge strong demand here. It's not letting the prices. If not here, you would have booked your profit somewhere here, you would have exited. Because it is holding the prices, definitely you would have kept in this zone because this is strongly holding. Probably you will use a trailing stop loss. Once prices reached near to this, you would have used a trailing stop loss. This could have been your trailing stop. 75 minutes. This is violated, you would have exited. Or still you might be thinking this will be violated and if you did not exit, you would not use this trailing stop loss. Prices would have gone up. Next time again prices reaching near to this, maybe you might have alerted yourself. At least you would have kept a trailing. This time you would have got even profit when this zone is violated. Earlier you have opportunity here. But this opportunity if you missed, Only after seeing this price action, if you would have alerted when prices reached near to this, but see how your profit margin is reduced. Still you would have got a profit when this 5 minutes, 1 minute trailing stop is violated. You would have got a profit, this much profit you would have got. Let me draw the info line. Trailing stop, if you would have taken somewhere trade here, this is the profit, 1 rupee 60 paisa profit you would have got. Okay, instead of getting loss, you would have got some profit. What I am trying to say. But anyway, this is for the strategy, those who have taken this trade, how you would have got profit, I am telling you. But why prices did not reach this 15 minutes fine-tuned area is mainly because of this 1 minute area. Just before this 1 minute area is also strong order flow is there, not letting the prices entering into this zone. Here also you have one more demand zone, but this is slightly violated here. But still, this is the zone holding the prices. So 1 minute zones played major role. But anyway, these are all only lessons. But the zone is stopped out. We have to accept that. Because it is violated the zone, how much loss we would have got? 1,200 rupees loss, which is minus negative ROA. 0.8% negative ROA you would have got as per one futures margin cost. This is about Tech Mahindra. And we have one more stock, HCL Technologies. This is also a 75 minute supply zone. We have a drop base drop. This drop base drop is fine tuned with 15 minutes time frame. In the 15 minutes time frame, you have ERC candle as a leg-in. You have a base candle and then drop candle. Rally base drop. So this 15 minutes again fine tuned with 5 minutes time frame. Here you have two zones are available. One is rally base drop. This is the 5 minute zone. And again you have a drop base drop. This is another 5 minute zone. This drop base drop is already tested here earlier. But how it is tested, see, rally base drop. Again a LOTL zone is created like this. But anyway, this is outside the fine-tuned area, but overlapped. It is overlapped with fine-tuned. Generally, what happens, such kind of LOTL zones will be created in high liquidity zones. Maybe, I don't know, maybe this could be a high liquidity zone, drop base drop. That's why from here it picked up the orders and again a new zones are created. When such kind of zones, mostly we plan our trades, the high liquidity area where the origin is a drop base drop. Because multiple test prices will come into this area and again come down, if it is a high liquidity. So remember, we are not confirming, maybe there is a possibility. So we want to, maybe we can plan another trade here, but risk is high. You can go for, because the risk is high in this area, in this zone, the logic you can apply like this. Type 3 proximal. Previously also see, type 3 proximal it is tested. Picked up the orders and then rally based drop is created. So those who wants to minimize the risk, this is one strategy. Or another strategy, go to 1 minute time frame, any good, if you identify any good 1 minute zones, there you can plan a trade. But 1 minute zones, the problem is the risk management is not really proper in high liquidity zone strategy. So that's why we mostly rely on 5 minutes. Worst scenarios, only you go to 1 minute, but proper risk management you have to take. But today prices did not enter into this zone, we didn't get a trade. But above there is a fresh zone, is the rally base drop. The type 2 proximal is a fresh zone, type 2 proximal. If you go for type 1 proximal, it is again already tested here, drop and in the next candle, rejection. But anyway, type 2 we are using. So this is a fresh order flow is there in this area. But today what happened, prices came last minute. Again a new 5-minute zone is created. We don't rely on this. The reason is this is completely outside the zone. So this is about the high liquidity zones we identified, and we got good 2 trades and excellent profits. We got around 7.5% average ROIs we got from both the trades together. And one stock is violated, that is Tech Mahindra. And HCL Technologies, we didn't get a trade. So these are the high liquidity zones generated from our yesterday's end of the day report. Hope this information will be helpful to you. Let us all meet again in our next video. Thank you.